Welcome students. In India, digital public infrastructure has reduced many hurdles and ensured financial inclusion is much more robust. Along with financial inclusion, now another step has been taken by Reserve Bank of India to ensure not just financial inclusion but also financial inclusion with financial integration. To understand this, you need to go through the new initiative of helping JAM, which is Jandan Aadhaar and Mobiles, combined with UPI, which already revolutionized it, and now it is ULI, which includes and forms the arsenal newly. This arsenal of ULI is what we are going to discuss today, and how this Trinity can revolutionize and make the financial integration comes along with the financial inclusion. Okay, to know about this, first we need to understand the problem that is existing. The problem that is existing in India is lack of credit history. Lack of credit history is due to a peculiar problem which is being informal sector. Predominantly 80 to 90% of Indian businesses operate in informal sector. So we have less credit history. So this has created a problem of informal lending which charges very high rates rather than the banking sector. So as credit is not available at cheaper cost, the ease of doing business has been impacted, and many are not financially integrated to access various products that are competitive enough. To solve this problem, RBI has introduced Uniform Lending Interface. What is this Uniform Lending Interface? If you need to understand, let's bring the corollary and draw the parallels about how UPI has been bought. UPI is an interface which allows various banks to operate on IMPS. You know IMPS, right? Which is immediate basis, and it doesn't take even seconds to operate. Less than a minute is what IMPS would operate in, and you'll find transfer of money from one bank to other or one app to other through just an UPI ID rather than bank accounts, IFSC codes, and etc. Similarly, this is when you have it on debit basis, when you have money in your bank. But if you need a loan, then ULI is what comes into play, and this interface allows various players to lend their money, and this lending business would operate in similar fashion as UPI. But here you can understand something which is common, like ONDC, which is Open Network of Digital Commerce. So with ULI, you need to understand that various competitors, you can call them competitor 1, 2, 3. Assume these 3 are operating through 3 banks. You can call it, one might be SBI, another Axis, maybe another is HDFC, or any other players like maybe Bajaj Finance as C4. They would comparatively give you at their own rates which they would offer based on your credit history. So you can choose among these products which is better. Today we are going to platforms like Paisa Bazaar or some other places to compare the interest rates and choose the better one and better policy if you need insurance. So similarly, there can be an ULI integrated platform where you can compare various products that could lend instead of going for a random app which would lend you at high rates informally. Now the game of NBFCs would get better and better competitive because they can offer at rates that are lucrative than banks, and instead they can also make their loans secure. Now you need to get to the root cause to understand why their loans were at higher rates because the risk involved in it was unknown. When the risk involved in it was unknown, they don't have credit history. You don't know whether he's trustworthy or his ability to, he or she can pay back the money within time is a question about the credit history. If this is the problem, then how did RBI solve it? It has bought a public credit registry. What does this public credit registry mean? Earlier, every bank has its own records, and it has information about only their customers, and it was credit rating agencies who is to give the credit scores, and the entities which are not individual, who don't own PAN, like a self-help group, has no history at all. But a self-help group can repay because the ability to combinedly bear the risk has been robust enough to pay back the money at time. But still, they were not given better interest rates despite government support, and unless some scheme would facilitate them irrespective of their credit history, they were not getting the money. Now, another businesses like who don't own PAN but transaction account number, which is TAN card. Instead of PAN, TAN was taken into account to give it. And third one was about collateral requirement. And this collateral requirement was essential to assess the repayability, and this collateral equivalent money was being lent. Okay, now with this digitization and having public credit registry, how can unified lending interface ULI can solve this problem? Because with public credit registry, unlike the credit score, you can get various parameters which helps them give you credit history in real time of various banks' data clubbed together. Okay. Along with that, as we discussed in earlier part, collateral problem could be solved because various innovative products have been launched but not being used perfectly by the monetary policy or other targeting mechanisms available for bank properly. For example, you have warehouse receipts, and you have TReDS platform, right? What is TReDS platform? Trade receivables could be traded at discount in a platform which is launched by again RBI. And you have warehouse receipts, and these warehouse receipts could be used as collateral to get the loan in next crop season is what being mentioned by RBI. But the penetration and utilization has been very poor with this. And when these two are digitized and they are used along with the uniform lending interface, you also got the problem solved with collateral because these two can be used as collateral. And along with this, many digital gold wallets, digital gold in any form, maybe sovereign gold bonds, maybe any other, if sovereign gold bonds would be discontinued, then the digital gold now, maybe in many forms, it can be a gold ETF for any of your stock holdings could be used as collateral. So with all those things, you can take loans at lucrative value because gold loans are comparatively cheaper than any personal loan. Even the home loans could be taken with the collateral of your property that is existing with you. So with all this digital platform, it's again establishment of new digital public infrastructure. So as nature of digital public infrastructure, as we utilize, it's an asset which appreciates rather than depreciates. So it's an appreciating asset. So the revolution which has been created by UPI could be replicated and could be bought back with this. Hope you understood what we are envisaging and what the goal RBI is actually putting. Now, the prime purpose to understand why to bring this ULI along with UPI is to have targeted monetary policy. So monetary policy has not been targeting properly because despite RBI bringing policy rate changes with many informal platforms infusing the liquidity differently, it has been problematic to control inflation just by the theoretical thing that they are envisaging. So to address this problem, it has been very important for RBI to bring the products of financial integration. India has been very good in financial inclusion, but financial integration has been very essential. Inclusion, which means including many other people to save their money in the formal sector, organized sector, but access to the money when they need it and when they don't have through loans is possible only when your products are made available to masses irrespective of their stature, the performance when it comes to digital literacy or other thing. Though they are lacking, they are able to use UPI, but the lending has not been great. So it also will be aided by the behavior. When you say behavior, assume there's a small merchant who would go for normal businesses, and the way Paytm or someone else or any other QR code which will help you track the transactions and the common receivables or the turnover of the business to measure and find the equivalent of credit history to lend him. So this way you'll understand how common man and small businesses would be able to raise loans at cheaper rates rather than the insurmountable interest burden they are bearing today. So let's hope that these platforms will help you find India in a better place where our economy gets its fundamentals strong and liquidity is properly managed by monetary policy targeting being better. More than that, India would be a betterly integrated country with better financial inclusion. Let's hope for this. Another day, I'll be back before you with much more interesting topic. Till then, it's time to bid adios. Thank you.